Good afternoon, everyone, and welcome to this Open to Export Q&A webinar from the Institute of Export and International Trade, in which you can ask global trade experts about how COVID-19 has changed international supply chains and what firms can do to adjust. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. Now, we are 6 months into the coronavirus crisis, and with a second wave underway and lockdown restrictions being reimposed, we will need to live with this pandemic for a little longer yet. This is having an unprecedented impact on businesses home and abroad and could have long-lasting effects on global supply chains. Furthermore, the UK is set to cease trading under EU rules at the end of the transition period on 31st December, meaning traders need to prepare for the significant administrative and possible tariff changes this could bring. To answer your questions on all this and so much more over the next half an hour or so, I'm delighted to welcome two fantastic speakers today. Firstly, we'll be hearing from Kevin Shakespeare from the Institute of Export and International Trade about the impact on the virus on global trade generally, including international shipping and customs. Hi there, Kevin. How are you today?
I'm good, Will, and good afternoon, everybody.
And we're also delighted to welcome Aman Gill from our partners for today's webinar in Bibby Financial Services, who will be covering trade finance. Hi, Man. How's it going?
Afternoon, Will. I'm well, thank you, and thank you for joining us, everyone.
Now, just a couple of housekeeping notes before we get going on the next slide. Thank you. Firstly, this new Q&A format is slightly shorter than our previous webinars, lasting around half an hour, but we'll be sure to get through as many of your questions as we can. Secondly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. And remember, we are here to answer your questions today, so please do feel free to fire them in. And afterwards, you will receive access to today's slide pack and a recording of today's webinar in a follow-up email we will be sending over the next day or so. To begin with, though, on the next slide, we'll be running a few polls throughout today's webinar, starting with this one, which is asking what has been the main impact of COVID-19 on your business. The options we have here are delays at customs, cash flow issues, staff off sick, decline in demand for our services, rise in price of freight transport. Now, Kevin, while people are answering that poll, you've presented a few webinars on COVID-19 and global trade for us back in the spring. As we enter the autumn and a second wave, what are the main learnings businesses can take away from having already gotten through the first wave of the virus back in the spring?
Yeah, it's a very good question, and every business will differ, and it will obviously depend on the products and services provided by your business and the countries of sale and countries of purchase. I think, as I will talk about shortly, changes in supply chains, or certainly making sure there's more supply chain contingency. If alternative sources of supply, whether that's regional or local sources of supply, have been a factor. And I think also the relationships between suppliers and customers are absolutely fundamental. It's just reinforced the importance of everybody working together and to find shared solutions.
Thanks, Kevin. Thank you very much. That's a very good answer. And just going to now close that poll and share the results. So 52% have said there's been a decline in demand for services, which is unsurprising, but sorry to hear that nonetheless. 90% say a rise in price of freight transport, 11% cash flow issues, which we'll come on to shortly, 8% delays at customs, and 9% staff off sick. Speedy recovery to those 9%. But now to hide that poll and to move on to the first presentation, over to you, Kevin.
So thank you very much. So what we're going to look at just in the next few minutes is the impact of COVID-19 on supply chains, but also some factors we're seeing as well within supply chains and practices carried out by businesses. And I would stress that it clearly depends on the type of business you are and the sector you're in. If we can have the next slide, please. So these slides are made available to you. We obviously only have a certain amount of time to cover points, so I'm going to really concentrate on some of the key points here. Is when we think about supply chains, we do have to think about all the different elements within supply chains, whether that's the purchasing, whether that's the stock management, stock holding, whether that's the customer and the sales side, and obviously logistics depend on the nature of the business. So we've got a number of factors to consider. That doesn't change, the principles don't change. I guess what we've seen is obviously the importance of having robust supply chains, alternative supply chains. Just one point to pick out from this slide, you'll see on the left-hand side for track and trace software is traceability in the context of COVID-19. So that track and trace software may be provided by your logistics provider, but it can be important in terms of seeing where the goods are in the supply chain, if it is obviously goods you're trading in as opposed to services. But that visibility can be important. So if your supplier is saying that the goods are on the water and suddenly you still see they're not, then that traceability is important. So it shows the importance of track and trace software. But most of all, for all of these, it's making sure that you have good stakeholder relationships with all the parties. And we'll be focusing on one or two of these elements on the left-hand side shortly. So we have a next slide, please. So the way in which we do business has changed, and that's I guess clearly the negative or disruptive impact of COVID-19 has had on supply chains. We've obviously seen big increases in freight rates, especially the cost of air freight, which has a 19% of you obviously indicated that impact. We have clearly seen supply chains disrupted during lockdown, and unfortunately that has sadly impacted it again on declines in certain businesses. But we are seeing more and more companies looking at more local regional sources of supply chains, if nothing else, to have that as an alternative in the event of future lockdowns. So looking where your suppliers are based, both in terms of countries, but regions of countries as well, and at least potentially having alternatives. We have seen clearly some businesses diversifying into new product lines, and whether that, if you like, would be e-commerce, online related technology, where it's sort of possibly diversifying into the services element, or clearly life sciences, healthcare, Medicare as well. So there has been some, I guess, diversification into new product lines, but I do appreciate for some businesses that is not feasible. There is a COVID-19 commodity code list, which I will talk about shortly. And we've seen some countries liberalise trade. So in their urgent need to get goods into the country or certain types of goods, there's been liberalisations, but equally some restrictions of what can be exported because it's deemed to be important for the national need in these difficult times. And clearly PPE has been an example of that. If we have the next slide, please. So I talked about the COVID-19 commodity code list. So the World Customs Organization set a list which really allowed countries to then think about how they could apply or remove some import barriers to certain types of goods which are on the commodity code list. So the World Customs Organization, as you can see on the left, excuse me, the left-hand side, introduced certain types of products designated, which, for example, could result in zero tariffs for goods coming in, zero VAT, and sometimes expedited customs clearance as well. And the European Union and the UK have updated that list there. So if your product is related or on that commodity code list, then if you're importing currently from the rest of the world, you could receive relief and not have to pay import duty and import VAT because of the urgent national need around these products. And this includes products for research as well as the actual finished product itself. If we have the next slide, please. So I just wanted to mention in terms of supply chain efficiencies, and this is not just related to COVID-19, But it shows what we have seen, and also bearing in mind post-transition period trading next year, an increase in companies applying for what we call authorizations and special procedures like warehousing, customs warehousing and inward processing, where effectively you bring goods in, import into the UK, and if you re-export them, the import duty and import VAT is eliminated. So that can be important in terms of supply chain efficiencies, and clearly could be important if there is no trade deal with the European Union and you're importing goods and subsequently re-exporting. But it could also apply if you're importing goods from, say, China and you're re-exporting them to the European Union. You can defer or eliminate the import duty through an inward processing, which is a manufacture production process, and customs warehouse if you're storing the goods in a warehouse. So I just wanted to mention that in terms of supply chain efficiency, and we are seeing greater use of that in the United Kingdom. And from the 1st of January next year, the indication from government is these authorizations will no longer require a bank guarantee to support them unless you are a high-risk trader. And happy to take questions on definitions there. If we have a next and final slide, please. So I just wanted to mention, because clearly that the World Trade Organization are there to reduce barriers to world trade, and clearly COVID-19 and protectionism is putting some of those barriers up. But there are some shining lights in the world. There's the likes of the African Continental Free Trade Area, which is hugely exciting for the continent of Africa, both for intra-African trade, but also for companies doing trade to and from Africa. So it creates huge opportunities for the African Continental Free Trade Area. And equally, the Trade Facilitation Agreement, of which the UK is part of, is seeking to reduce the number of trade documentation, electronic customs clearance, faster customs clearance, and a single window of documentation to customs as well. So, for example, at the moment, HMRC are working on a project of the 2025 border, looking at all these processes that ultimately improves import and export procedures and reduces the cost of import and export through documentation and the time. So we are seeing a big push globally, which is not just the UK, but a lot of countries are improving their customs processes. So previous delays to customs processes in, for example, the likes of Middle East and Africa are dramatically improving in terms of the clearance times, which helps exporters from all nations. So thank you very much indeed for listening to me. I appreciate it's only been a few slides, and I'll pass back to William now. Thank you.
Thank you, Kevin. We're going to run a second poll now. This poll is going to ask you, have your payments from international buyers been affected by the pandemic? The options there: no change, customers taking longer, had to renegotiate payment terms, customers refusing to pay, or not sure, rather not say. And while people are asking that question, I'm delighted to introduce Aman Gill, the Head of Structuring for Trade at Bibby Financial Services, someone with vast experience working in trade finance in particular, of course. Aman, you're going to be talking about the impact on the financing of supply chains the pandemic has had. For those in the audience, can you briefly describe what trade finance is?
Thanks, William. Afternoon, everyone. Yeah, so I think I'll talk about also, what we're seeing with our clients and facilities that we're providing for prospective new clients. Trade finance, there are various definitions out there, but essentially it's a solution, a funding solution that allows us to finance or purchase the goods on behalf of our clients and bridge that cash flow gap between paying or having to pay or promise to pay suppliers and them ultimately receiving payment from the customers.
Thank you. Yeah, man. And just to show the results to this poll, which I'm sure will be of interest, particularly to Bibby, because I think a lot of this is taken from one of their recent surveys, the options. 28% saying customers taking longer, but 35% no change, and a fair few rather not saying at this stage. Aman, any surprises in that poll?
No, I don't think there are any surprises. I think what we've seen in terms of I guess there's two perspectives to look at this. One is, renegotiation and supplier payment terms, in terms of businesses having to pay, suppliers, and also the potential payment terms with their end customers, and having to renegotiate potentially longer payment terms with them.
Great, thanks, Ben. And over to you for your slides.
Thanks for that, William. So yeah, I'm as a bit of an intro, I guess. COVID-19, particularly with regards to supply chain and trade finance, is often referred to as a black swan event. I guess due to its impact on the global economy, but particularly in relation to supply chains. And I think one thing it's highlighted since the outset, and the initial lockdown started, is that is really how vulnerable businesses are due to I think a number of factors that have taken place. I think, and one of them is, we've strived, and businesses have driven sort of supply chain optimization and efficiencies, and reduced inventory as a result, whilst also maximising sort of their asset utilisation. So, I mean, ultimately, it's highlighted, I think, how interconnected and interdependent the world really is. If we go on to the next slide, please. I've sort of gone through this definition that we put together in terms of what trade finance is. I think one thing I wanted to highlight in terms of stats is that I think the World Trade Organization estimates that 13 to 32% is an estimate of theirs in terms of the reduction in merchandise trade due to the pandemic, and that will be a reduction in 2020, which I think one of the earlier polls, it sort of highlights that decline in demand that we mentioned earlier in one of the polls. Next slide, please. When sort of looking at and summarising some of the impacts based on conversations that we've been having with our clients and prospective clients, is I think some of the main impacts that, to summarise them, have been delayed and cancelled orders, and I guess again the decline in demand also plays a part in that. We're seeing increased stock holding, and as a result of that, cash flow being tied up in that stock holding, because their buyers just aren't open for them to make deliveries into, and are trying to get their suppliers to hold on to stock. The availability of company searches and credit insured limits. I think in terms of searches, obviously during the lockdown, particularly if you're looking to undertake searches on suppliers in China, whilst China was on lockdown, some of the local offices there were providing some of the information from a local perspective, which then wasn't feeding through to sort of UK, Europe, to then make their sort of supply chain decisions on. In terms of government support, there's obviously initiatives that have been launched to support some of the credit insurance market, and although it's been delayed, it's certainly welcome and is having a positive impact. As far as I'm aware, it's as it stands a bit of a short-term measure, but till the end of this year. But hopefully there'll be some flexibility around that, alongside some of the flexibility that's been shown with the other government initiatives that have been put in place since the pandemic started. And in terms, I think Kevin mentioned some of these earlier, in terms of growth sectors that we've been seeing, and linking it into the reshoring of supply chains to the UK. So I mean, some of the growth areas during the pandemic that we've experienced for inquiries and facilities for have been fast-moving consumer goods, PPE, as you can imagine, but also ICT due to people working from home. And it has created opportunities for both existing players within that sector, but then also for new market entrants, and often with the likes of the PPE, for example, particularly where demand was outstripping supply. The margins were particularly high, but obviously with new market entrants that have not necessarily familiar or experienced in that sector, there has been a bit of an increased risk in that particular sector as well. Next slide, please. Just to touch on some of the diversification of supply chains that we've been seeing, and what have been the leading sort of factors resulting in that. So viability of manufacturers and suppliers, obviously it's been a very challenging period for manufacturers, suppliers, you know, and the buyers, and we've seen that as a result of, you know, cancelled orders or failures along the supply chain, for i.e. for raw materials that have impacted, you know, the rest of the supply chain. Changing supplier payment terms, you know, we've noticed a trend from open account and cash against documents to an increased, I guess, demand and utilisation for our facilities that allow us to fund deposits and pre-shipment finance. In addition to sort of, you know, the more traditional letters of credit. So where there's, you know, there's been an ongoing decline in the demand of letters of credit because of the administration and the cost element, that there has been a slight uptick in the request for letters of credit. And coming back to one of Kevin's points, it really does depend on the product and the sector that the businesses are operating in. Local supply, so reshoring of some of the supply chain, which has increased due to some of the impacts that I mentioned on the previous slide as a result of COVID. A reliance on technology, not just in terms of working from home, but the surge in e-commerce. I think you know, global merchants in April saw an over 200% increase in what was put through some of their merchant online terminals versus that same time last year. And there's increased digitization in terms of you know, documents and that are used within trade finance and shipping, and I think the pace of that will increase as a result of COVID. And then just the impact of Brexit, you know, in terms of you know, I think you know, surveys out there have suggested sort of 2/3 of businesses have delayed Brexit preparation as a result of COVID. And you know, there are concerns around the increased admin. You know, I think 1/3 of businesses are concerned with admin, 2/5 with the additional requirements in terms of customs clearance requirements. You know, almost half are concerned with potential delays in shipping. And I think, you know, one of my summary points on that would be, I think partnerships are going to be key, not just with your supply chain, but also with the freight forwarders that you use, with you know, you know, institutes like the IOE that can help in that area. I think they are going to be key during some of the you know, hopefully we've been through some of the most challenging times, but what also lays ahead. And I think that's the last slide. Thank you, everyone.
Thank you, Man. If we go into the next slide quickly, I think we'll have another poll which I'll launch while we start the Q&A. So this poll is asking if companies have done any of the following: reshoring, diversifying production, or continuing with the same. So let's dive into the questions. Getting a fair few good ones in. The first one from Bridget. This would be for you, Man. And it's a really good question. What impact do order cancellations have on the entire supply chain, and how can a firm manage this?
That is a really good question, and it's one that we get asked quite often. I think the pandemic's highlighted global reliance, particularly on regions like China and Southeast Asia, for raw materials and components. And during China's lockdown, supply fell, which you know, at the same time demand was increasing for essential goods, but also at a time when manufacturing was operating at a reduced capacity. So although the impact from cancelled orders was reduced slightly, there were certain sectors that have been delaying and cancelling orders and continue to do so, particularly in the retail and wholesale sector. What that's meant is that some of these manufacturers and the supply chain have carried and incurred significant costs in terms of time, labour, and additional raw materials. and shifting these resources and diversifying them has obviously had a negative impact on them. We've experienced examples whereby raw materials have not been available from China, which has had a knock-on impact on a garment manufacturer in Bangladesh, which has ultimately resulted in delays in fulfilling orders. I guess how we manage it and how sort of the businesses that we work with manage it is, trying to work, and it comes down to relationships really, both with the supply chain and with then customers in terms of confirmation and verification of the end orders, and close monitoring and due diligence throughout the supply chain, almost in a sort of a critical path analysis way to make sure that there aren't going to be any delays along the way, and due diligence both on the end buyer as well.
Thank you, Man. I'm just going to show the results of that poll very quickly. 73% continuing the same, but there is a few people diversifying or reshoring, so 21% diversifying, 6% reshoring, which is already up on where it would have been a couple of months ago. Just a reminder, you can ask questions. You should see in the next slide how you can do that. And question quickly for Kevin, actually, a couple of clarifications. So Andre's asked, did you really say import VAT has been temporarily suspended? So if you could clarify that point. And then Sarah has asked, is inward processing relief for goods which are processed into finished goods, or can it apply to fully manufactured goods which are not changed in any way?
Okay, thank you very much. Two very good questions. With regard to postponing VAT, postponing is not the right word, eliminating VAT, that only applies for goods on the Covid-19 commodity code list. So in the slides which will be available, there's the link there to the commodity codes or the tariff product lines that are effectively subject to that removal of import VAT whilst they're on the Covid-19 commodity code list. So it's very specific to those commodities, if you like, that have a national need. But there are a number of products on there. With regard to inward processing, if the goods don't enter a processing process, so to speak, a manufacturing production process, then you won't be able to claim inward processing. However, if you store your goods in a customs warehouse, another customs procedure, then effectively you don't pay import duty and import VAT until those goods are released into free circulation, let's say into the UK economy. But if you were to release them or re-export them, so let's say from January next year you bought goods in from China, for example, you re-exported them to Germany, for example, or the Republic of Ireland, then you wouldn't pay import duty and import VAT if you held them in a customs warehouse in Great Britain. So clearly at the moment that's not applicable, because during the transition period we'll still come under European Union rules. But from the 1st of January next year, at the end of a transition period, that changes. So you have customs warehouse for goods that you're storing and re-exporting in this example, and inward processing where they're going through a manufacturing or production process. Thank you.
Thank you, Kevin. Another question for Aman. This one's from Lee, who's asked, how have payment methods been changing as a result of the pandemic, and are traders changing how they manage risk?
Thanks, Lee. That's a really good question. I think I mentioned earlier in one of my slides that we've seen a switch from open account and cash against documents to letters of credit or some kind of pro forma payment, whether that's pre-shipment or deposits. We've seen certainly an increased demand for us to fund deposits and in some cases pre-shipment payments to suppliers for up to 100%. And I think that's a direct result of some of these cancelled orders and manufacturers potentially being burnt during lockdown, even when supply chains have been fairly well established, and it's a knock-on effect right from end buyer right through the supply chain. I think in terms of how traders are changing the way and managing some of the risk, I mentioned that we're seeing a slight uptick in the request for letters of credit, and they're a good way for traders to not only manage the risk in terms of making sure that the supplier isn't actually paid until the goods or the terms within the LC are met, i.e. the goods are shipped, but also provides the suppliers with the confidence that they need to undertake the manufacturing, and potentially have the option to discount that letter of credit to source their own raw materials and components via their own bank if required. And we see quite a lot of that in areas such as Pakistan, Bangladesh, China. And then also, I guess further on from that is, I mentioned about purchase orders from end customers and confirming and validating those. And if businesses are working on sort of forecasted basis, then re-evaluating those forecasts, working closely with their end customers, and potentially renegotiating contracts with one another, particularly in regards to minimum order quantities and sales levels.
Thanks, Aman. We're going to do a few more questions. I know we're at half past, but I think it'd be good to get some questions in. So we had one from Robert in advance, which is basically asking, how do you manage the double effect of a pandemic and Brexit? And we also had a question, Justin, from Neil, who's asked, are you seeing an increased demand for funding for Brexit stock holding? So Aman, do you want to open on that, and then Kevin come in after?
Yeah, sorry, what was the beginning part of the question, William? Sorry.
In terms of managing the double shock of Brexit and coronavirus, how are your clients seeing that challenge?
I think for a lot of clients and businesses in general, I think certainly COVID has meant that they have focused more so on dealing with the impacts of COVID and the fallout as a result of that than necessarily with their preparations for Brexit. Obviously, increasing stock holding, that's something we generally saw during COVID in particular product areas, and I think it's something we will see more of as we hit the transition date in January. So I think there will be an element of stocking up as we approach the deadline.
And Kevin, any thoughts from your end on the managing both Brexit and COVID at the same time?
Yeah, obviously it's clearly not easy for businesses, and I think what coming back to one of my earlier points, the need for customers to communicate with suppliers and customers, it works. It's applicable to any aspect of doing business, whether it's linked to post-transition period trade-in or the impacts of COVID-19. So communication becomes absolutely key, and planning as well. So planning, trying to obviously interpret and understand what the post-transition period trading will mean for your business, and which is part of the planning process. Obviously, I would indicate that there is a HMRC grant scheme available for businesses which they can look and plan with regard to customs procedures and other post-transition impacts on their business. So certainly do look at that. But yes, it's not easy. But again, communication becomes key and planning becomes key as well. And clearly, we're trying to do all we can to support those factors. Thank you.
Thank you, Kevin. I'll do a couple quick shipping questions for Kevin, I think. So one from Magdalena, I hope I said that right, was asking, are there any blank sailing fixed schedules from Asia to Mediterranean countries for the next 6 months? And Nicholas asked, do you anticipate ocean freight costs will be back to pre-COVID levels anytime soon?
Okay, yeah, interesting questions. I think with regard to blank sailings, I know that obviously has been an issue during the pandemic, and it's easy for me to say that obviously traders need to work with freight forwarders, check visibility, but it's very, very difficult when you get blank sailing. So clearly the pandemic's returned, and if there is a second wave, then unfortunately there possibly will be more blank sailing. So visibility of supply chain and awareness at the earliest possible stage becomes very, very important. But I do accept it's very not easy for businesses to manage those aspects. The other aspect, I guess, in terms of freight costs, Clearly, ocean freight has been affected, air freight more in terms of costs. So one of the big factors there will probably be supply and demand in terms of freight costs as to what their price of oil fuel will obviously be an important factor as well. But unfortunately, I guess we do live in this world of volatility at the moment. So it is very hard again for businesses to actually manage that volatility with the increase in freight costs, and looking at supply chains. Clearly, the more local regional supply chains, the actual cost of moving the goods is less, but equally the cost of manufacture in some countries are less as well.
Thank you, Kevin. And on the topic of volatility, we've had a question in from Mark about currency. So I think this will be for you, Aman. Mark has asked, how do you protect trade finance trade against currency risk, and how does this affect the client's availability?
Thanks for that, William. That's a really sort of topical question. I think certainly more than 2/3 of businesses that have a currency requirement will have been impacted by currency FX volatility at some point. We have a Bibby foreign exchange business that if we provide trade finance facilities for any clients, then the Bibby foreign exchange facility is also sort of goes hand in hand with that trade finance facility. It allows our clients to purchase FX foreign currency, either spot, but then also more importantly enter into forward contracts. And the objective of that is to minimize future currency fluctuation and sort of secure and fix the profit margins for our clients. So that's one of the key ways that, particularly when there are international trade and foreign currencies involved, to lock in the prices at the point that the trade transaction is entered into, to ensure that, whether it's from the sales proceeds directly or whether it's via an invoice finance facility, once the goods are sold and invoiced, that there will be a sufficient availability there to repay the trade liability. That's one of the key ways that we do it.
Thank you, Man. And one last question. This one's from Denise, who's asked, are we seeing a greater use of new technologies in supply chains such as blockchain or digital documentation as a result of the pandemic? Aman, do you want to go first and Kevin finish on that one?
Yeah, thank you, William. I think certainly we're seeing an increase in digitalisation. I mean, we've seen delays in documentation through the freight forwarding system as a result of reduced staff levels and working from home. Digitisation in terms of booking freight is already happening, and with blockchain technology advancing, it's certainly going to be key to validation and visibility throughout the supply chain going forward, to digitize more of the paperwork that is used in trade finance across the industry. I think add that into the fact that we're seeing an increase in e-commerce during these times, then I certainly think it's an area of increased interest.
Yeah, I think just to add to that, I think I very much agree with everything that Aman's just said. Really valid points there. Is that yes, businesses are looking at it. It will depend on the types of businesses. Some businesses are looking more at 3D printing, for example, and robotics. But it does depend on the type of business and whether it lends itself towards that. We've had the advent of electronic airway bills, which clearly have had a bit of impact on certainly some of the airlines carrying cargo. So, and I think just to reinforce what's been said, that we are seeing a move to it, maybe not as quick as what we want, but there'll be continued steps to move towards that.
Excellent. Well, on that note, we have overrun, so I think I'm going to have to wrap up. Thank you once again to Kevin and Aman for the presentations and answers today. I hope everyone has found it useful. If we move to the next slide, we might need to skip the poll as well, I think, this time. So on this slide, you will see that our next webinar is on the 13th of October, which will be looking at how businesses can succeed in the US market. That will cover export requirements, how to set up a store there, and the impact of currency fluctuations on doing business in the US as well. That's taking place at the slightly earlier time of 12 that day, but we'll be sending an invite around for that later on. Finally, on the last slide, just before we go, a reminder that membership with the Institute gives you a range of benefits to deal with the myriad changes ahead. This includes access to our technical helpline, discounts on training, a wealth of online resources, our daily bulletin with all the key trade stories, continuing professional development program, industry recognition, and maybe one day in the near future, we hope, some networking opportunities in person. Very much hope for that. But to find out more about our training and membership offerings, please visit the site at export.org.uk or feel free to get in touch at institute@export.org.uk. For now, though, thank you for tuning in today. We hope you found this session useful. Please do take the exit survey to let us know what you thought and suggest any future topics we could cover. But for now, goodbye, everyone. Thank you.